Robinhood earnings great, SoFi earnings hate. Tanner was not late. That is how we do it, ladies and gentlemen. Welcome to the Fintech Frenzy. So let's get into some news. One, we're going to be talking some SoFi. The other, Robinhood. Okay. And I just got a little bit of an update on SoFi business accounts, checking and savings for businesses. So that's kind of interesting. We're going to get into that in a second. But actually, yeah, let's do SoFi first, and then we can jump into Robinhood. So one, a bunch of people received an email today. Okay. What did that email say? Non-permanent residents can now access SoFi Invest. Now, for some people that I have communicated with, that they were really excited for this, that they were hoping to use SoFi Invest, and other brokerages offer non-permanent residents to access their brokerages, but SoFi was not one of them. So allowing this is actually pretty exciting. And obviously, they're going to get all the same features as what SoFi Invest should have. This is not a massive TAM expansion, but new products do breed new customers, and that will actually end up going to the bottom line if new people end up signing up. So, congrats. Now, that wasn't the end of the new product style upgrades or features that we ended up seeing. So first off, this is a little two-piece. And just so people aren't going crazy, probably around 2 weeks ago, I had noticed that SoFi went to 3.0 on their update. Like the, what do you call it? The update code or whatever. Ended up going from 2.2 up to 3.0, which is considered a major upgrade. Now, or major update. Now, we didn't know exactly at the time what that meant. I'm still under the belief that this is a Technisys upgrade. And now, already, according to app figures here, that we have broken into 3.2 just 7 days ago. Now, I'm a little late on this, right? 7 days, but I am not late on this next little part that I wanted to show you guys. Thank you, Ken Megan, for sharing this on X, but we're officially already past that. In the App Store, we are officially at 3.3.1. What are all the upgrades for? Like, this is jumping through the numbers here. Whether this is a big deal or not, I don't know. But some people are starting to get a little bit, asking some questions about what the heck they could be updating. Now, in my opinion, this is exactly Technisys, okay? Updating through, and now that they actually have a new back end, of course, there's going to be lots of new updates because you're on a new code and software. So now you actually get to use it. With that, not only did we get the non-permanent resident upgrade for SoFi Invest, Ken Megan, once again, just scouring through the app right now, looking for what this could possibly mean, stumbled across an update that we've seen previously, which is the small business tab in their products. Except this time, small business has not just business financing, but business checking accounts offered by Novo Business Checking and American Express Business Checking. I got to be honest with you guys. At first, I was like extremely disappointed. I was like, this is the opposite of what we want to see. I don't want to give away business clients to other businesses. I want them to keep their business here. But I don't know if this is them, is this them offering small to mid-sized businesses or the complete opposite? I've got no clue. The thing is with business financing, you can get a loan out with one company and then pretty quickly get a different loan from a new company. You're not really switching your business checking account all that often. So that is, sort of the downside there. So if they do end up giving all this away, then yeah. Now, it is actually a boost in terms of their revenue through revenue, like lead generation. So if they do bring people over to Novo Business Checking or Amex, that those companies will actually pay us for the referral for those businesses. Okay. I'm sure they're set up with some customized rate, so I won't be able to find the exact amount that we would make per business, but it would be a lot. Now, that's all we know so far. I'll keep you updated on the other products that we see after 3.0 because, like I said, in the last 2 weeks that we went to 3.0, we're already at 3.3. I'm sure they're making vast and very quick changes to the company. It's my belief, like I said, it's Technisys. So I'll monitor that. On the other side, however, bear with me. Want some drink. Absolutely empty. Good stuff. In the other news, we're going to talk about Robinhood, but I did want to get to some reports as well. I have a report from Bank of America on SoFi, as well as one from Charles Schwab. The Charles Schwab one made me laugh and giggle. But yeah. Hey, Ken Megan's in the chat. How you doing? Hola la SoFi familia. Sven, how you doing, buddy? I saw you in the chat, but I couldn't answer because you were in a different chat than mine. I only had privileges to chat in my own. I couldn't end up like going over to his and typing it. All right. Someone ban Nala until he says that I'm his fourth favorite Canadian again. If we're down to 6, dude, you're gonna kill me. I hear we're about to get a bank charter. Moon soon? For what? SoFi or for Robinhood? Either way, none of those are true. SoFi already has a bank charter and has had it for years, and Robinhood is not going to get one. Tanner, when are you going to discuss the 10Q? We can discuss the 10Q if you want. I mean, for people that have the course and everything and have access to my spreadsheets, they've already seen that, like, I've updated everything. All the numbers and charts and everything are already updated. There was nothing that I saw within the 10Q that screams a buy or screams a sell. It looked pretty regular and numbers that I suspected. So there will be things that come up from time to time that I'll need the 10Q for, but yeah. Before it was a lot of like lending information that we didn't have, but then like SoFi just hyper fixated it on telling us all those numbers. So like I already know we already knew what their losses were before the 10Q came out. You're right. I'll put you back to my fourth favorite or Canadian. Family members don't count. But what did you just have like twin Canadian twins born in your family? How did I go from fourth to sixth overnight? Were they not your family before? Um, Bit disappointing if SoFi decides to refer small business accounts out to Novo and Amex. Yeah, I mean, I don't have all the information. They potentially are doing this in the interim, or maybe they don't think that that's a big deal. Like similarly, what they're doing with Pagaya with loans, but in my head, that's different. Checking accounts are much more permanent. And if we can get clients to switch over to our services, then like, I don't know. That's a massive deal. Very hard to say, hey, go over to Novo. And then whenever we do publish it, they send you like an email and say, hey, if you're looking to consolidate all back to SoFi, why don't you come back? Wife is wondering why I'm watching you in the shower. I'm also wondering that. Will you do a review of Rocket Lab? Sven, I'm not a big fan of Rocket Lab. Um, I just don't understand the space. So maybe one day it'll do well, but uh, yeah. I just think they're a very heavily cash burning business in a market that I don't understand and don't think that'll even grow faster than industries that I'm already investing here on Earth. um, so yeah. Okay, let's get into some other reports on SoFi. Honestly, guys, I don't want to walk away from the stream, but I didn't realize I didn't have water. And like, I'm going to freaking, I may just like, give me 1 second. I'll be right back, actually. And it'll be like 60 seconds. And for the people who are watching the video, I'm just going to cut this out. Whoo! Okay. Dude, I never do not have water. All right. Let's do it. I'm like legitimately feeling so much better. All right. So, let's go to here. Okay. So, I saw this report come out. Schwab. There we go. Schwab equity rating. Now, from my understanding, this is just a quantitative a look at SoFi. So keep that as you would, but I still think that this is funny because Schwab puts this out to their clients and says, hey, you know what? This is our review of SoFi. Schwab equity rating, strongly unperform. Percentile ranking, 100. 100. This is the worst shit since I mean there's nothing else. This is the worst company you could possibly buy. Okay. Price volatility outlook as high as can be. I mean, this is up there with the upstarts and shit coins. Nothing could be worse. Okay. And I mean, for a beta of 1.7, like that is high, but still, that's fine. I just like the 100 percentile for the worst company someone has ever seen. Rationale behind our F ranking on SoFi? Well, it's easy. The growth rating, growth grade, it's a negative. Okay. This is very important. We don't like companies that are going negative. I don't know what growth they're talking about. Quality grade, negative. This is, worst company ever. It's going down. It's a penny stock. Sentiment negative. That is true. That's always been true. Stability grade negative. I don't know if the stability of SoFi has gotten better or worse. It says it's negative and not neutral, but like it's declined from their previous week. I don't know how true that is. SoFi's kind of been in this very stable period, but that's fine, And valuation, absolute negative. You're buying, the slowest growing stock at the most expensive valuation. There's nothing that could be worse. This is a percentile of 100. Okay. ESG rating, horrible. Okay. Socially, they're a laggard. Okay. They've never hired a female in their life. It's a full male, it's a fraternity. Honestly, it's a fraternity. The only women that do end up getting hired are not in executive positions or something. I don't know where they're getting this information, but this is a ESG rating. This is on your second page. What the heck, dude? Anyway, and I was joking. SoFi actually used to be sort of fraternity-like, but that's not here nor there. Other opinions. Morningstar, 4 stars. Okay, very good. And Market Edge, well, they're long as well. So, Schwab, 100. This is the worst thing. Okay. The invention of the nuclear bomb was not as impactful as SoFi's horrible rating to equity markets. This is gosh dang awful. But Market Edge, they're super positive. They like it. So anywhere in between. I guess it's a 50. Who knows? So that's fun. I saw someone clip that out. I thought I'd share that with you guys. And then in terms of B of A, I've got another little clipping here as well. This was after Q2. They put a $9 price target, and I want to talk to you guys about it because I think it's funny. Neutral rating on SoFi. They said, all their financials that we've already covered before. Relative to our forecast, they had strength in lending and financial services drove the outperformance. Relative to our forecast, why don't you just say it was good? Why don't you just say lending and financial services did good? They're like, well, compared to how shitty we thought it was going to be, I guess it's a little bit better. Like, dude, it was great. Like, shut up. Anyway, full year guidance was increased, primarily reflected by Q2 beat. That is true. Okay. Underlying business momentum remains robust with 41% growth in members, products up 43%, both excluding crypto, and tangible book value of $3.92, up 15% year over year. Overall, SoFi is executing its growth plan well in our view, but this is largely reflected in the valuation already, so we remain a neutral rating. That could be the case. We're going to go through and look at their valuation here in a second. Guidance raise reflected in Q2. SoFi now expects that full year 2024 adjusted revenues, EBITDA, and net income of $2.445 billion, $610 million of EBITDA, and $180 million of net income. At the midpoint, which is up from $30 million, $15 million, and $10 million from their prior guidance, largely reflected from Q2 outperformance. That's true. Not going to take that away from them. Also make this a little bit bigger for you guys. Okay, there you go. Sorry, where did I leave off? The guide implies that second half 2024 adjusted revenue and EBITDA of approximately $1.25 to $1.29 billion and roughly between $328 million, I guess, at the midpoint for EBITDA versus their consensus that was a little bit lower than that, implying higher top line growth offset by slightly lower margins. At this segment, by slightly lower margins. Is that true? I thought they increased margins as well, but if they're looking at the numbers, I'll believe them. Anyway, at the segment level, SoFi now expects lending growth to be around negative 5% year over year, from 8 to 5%. Financial services to be at plus 80 versus, anyway, we've seen all this, and a slowing of technology. What we liked, solid execution and improved revenue outlook for the lending and financial services segment suggests that SoFi's products continue to resonate. Members and deposits grew at 41% year over year and 81% year over year, respectively. 81 for the deposit side was quite strong and highlighted the momentum in their banking products. SoFi also provided incremental detail on personal loan rates by vintage. which has been a key area of investor focus, and enhanced disclosure should increase confidence in SoFi's fair value assumptions. Thank you. What we didn't like, technology segment outlook was lowered despite faster account growth, though SoFi did not note that this was, that they did note that this was transitory and driven by contract timing. Overall, guidance increase also only reflected Q2 outperformance, which could be conservative in our view. Everything's sounding positive, but they have a $9 price target on this stock. Okay? Their negatives were things that we also agreed were negatives. So, how did they adjust their pricing? Can I bring this up anymore? No, see, Notion is correcting the size of the page. Dang you, Notion, for... Anyway. EPS for 2022 came in actual 40 cents here. So 2024 expected EPS of 10 cents. That's on their upper side of their guidance, but not breaking out of it. Okay. And then in 2025, they say 31 cents. All right. 2026, it's on the lower side. It's actually below their guidance of 55 to 80 cents. They said 53, but that is above the consensus on Bloomberg of 45 cents. So much higher, actually. They're being better than the average Wall Street investor here. Where I disagree with them is the valuations. 68.4 times, 23.1 times, 13.4 times. I hope they're not saying or suggesting that that is where this company is going to hold out their PE, unless they're just meaning like this is literally what their forward PE would be. But that is extremely low. These are extremely low PEs for being a 2026 PE of 13 times, and yet they have low EPS. For a company that's growing 40% in members, 80% in deposits, you don't think that's going to continue? Where do we think that's going to slow? You know? I wonder what part of it deserves such a low valuation comparatively to other stocks. Now, they did actually say that the way that they're looking at this company, we remain a $9 price target based on an unchanged blend of 2 times tangible book value and 4 times technology net revenue, which I think is more fair than the people that are giving the technology 0 multiple and tangible book value 1 times or even less than 1 times, like Compass Point or Wedbush or some of these guys. I mean, it's just crazy. Like these guys still are conservative compared to SoFi's guidance. 53 cents versus 68 cents is what I think it'll be more along the lines with, and that's if it doesn't beat. So there's a massive margin there. And also where they think that the actual valuation should hold out at, I also think is like totally not what that should be at. But who knows? That's just someone else's opinion. Okay, now, unless anyone has questions on that, we're going to rotate over to Robinhood because I realize I've already burnt through 23 minutes. And I'm going to take a sip of water. When's Gary Gordon coming on for an update? I could ask him this quarter, or I could wait next quarter until it's a fully profitable business and then say, hey, what do you think now? You know? Because that's the one thing that he did not believe. So if I bring him on now, it might be a little too early. He'll still call it an unprofitable business. Yeah. Tanner, you know what's coming with Hood? You stated on the call with Amit earlier today. I don't know what you're referring to. So Robinhood, like I said, did report earnings today, and the stock did not move as much as investors would like. The stock's up 2% in the after hours, but the overall earnings were pretty freaking great. I can bring up their presentation really quick. We're not going to go through just the numbers. I want to go through some of my thoughts on everything. So, for the people that didn't watch the call, sorry. We're going to need to just take a quick look at the numbers, but we're going to focus mainly on some of the more in-depth details here. So, someone said shift for earnings review. Yeah, we will. We will. Net deposits were a record-breaking $11.2 billion. Oh, wait. No. How did I get to this quarter? I was like, that didn't even sound right. Okay. Here we go. They still have not updated their part in their earnings thing that says latest quarter and then clicking over to the link. That's where I got lost. Okay. Total net revenue, $682 million, a continuous beat of 40% year over year. Okay. Adjusted operating expenses, however, are growing much slower than this at only 14% year over year, only 2% quarter over quarter. 2%. Okay. This is leading them to have increased EBITDA margins of up to 44% now, up 100% year over year. And net income is also doing very great, bringing in, essentially 21 cents worth of GAAP EPS. Okay. Expectations from Wall Street said that this was going to come in at 15 cents. But Robinhood be doing great things. Funded accounts continue to grow up to 24.2 million accounts. They actually churned 300,000, but this is inclusive. So they actually added 570,000 and lost 300,000. This happens every quarter, so it's nothing to be worried about. We're looking at the total number going up. That's the important part. All right. Assets under custody continue to climb to great rates. And one of their newer products is actually the retirement accounts. This is pretty interesting. Look how freaking fast this is growing. So the product actually launched in Q1 of 2023. Since then, from Q2 up to Q2 this year, so year over year, we're looking at a 3x, nearly. If it hit 900, it'd be a 3x. But nearly 3x on their overall retirement accounts. And the assets under custody has 11x'd. Okay? And retirement assets under custody per account is just growing in an insane rate. This is per account, 4x. So couple the speed of how many people that they're actually bringing on and then how much they're actually adding on a per account basis is very interesting. Especially just over the last couple of quarters, right? 3.5 thousand to 6.5 thousand to then $10.6 thousand. This has not slowed down yet, so I expect it to continue up into much higher numbers. Gold subscribers, this is their $5 a month or $50 a year subscription plan to get all of these bonuses right here. You can read through that, but as you do, I'll tell you that the attach rate is now at 8.2%. They said in their newest cohorts, this was in Q1 of 2024, that they could bring in, or they were bringing in about 20% of the new customers onto the platform were getting gold immediately. 20%. They're at 8.2% right now. If they continue on that trajectory going forward, this number has so much more to grow. Not even just like a little bit. I mean, like more than double. Okay. Every time that they get someone on gold, not only do they bring on $5 a month or $50 a year, depending on their subscription style, but this also 7x's assets under custody, 2x's deposit growth rate, and 3x's retirement, or sorry, 5x's adoption rate. My camera is blocking the top of the number. My bad. The bottom of a 5 looks like the bottom of a 3. Net deposits. increasing, not to a record 11.2 billion, but a record of 13.2 billion. And guess what? They're on track to do that again in Q3, as July has already brought on $4 billion of new deposits. And the first week of August has already brought on another 1 billion of deposits, 5 billion in 5 weeks. So we're on pace right now to do essentially just a little over 12 billion this quarter. All right. Average cumulative net deposits are also skyrocketing. Look at their newest cohort. Okay. People getting on this platform are already like instantaneously putting more than $6,000 onto the platform, just under 7,000 right here. Then in the, couple of months that they stay with us, they immediately already start to get that all the way up to 8,000. This is the end length of the cohorts of people that have been on here for, we're talking years and years, potentially 4 years plus, right? They've been here for that long, and they've grown those accounts from being a $1,000 account and all the way up to potentially a $4,000, maybe $5,000 account. The people who are coming on today already above 6. So the user base that we're getting, much more useful to the bottom line than the ones that we've done, previously. Total net revenue, like I said, skyrocketed, but this was broken down into 2 parts here. So equities, yes, they're doing great, $182 million, $81 million, but options, $182 million. That is the good stuff. No, I'm getting this all wrong. The equities was 40, crypto was 81. That was my bad. $182 million is the option stuff. I hate reading these freaking charts. I'll just show you guys my spreadsheet after this. Net interest revenue up 22%. The one interesting thing here was the credit cards for me. Didn't move, even though it was moving pretty substantially just without Robinhood cards. So I was surprised that it didn't at least tick up to 7. Doesn't matter. Just, interesting to watch. It's also interest income as well. So maybe they haven't even had months for the interest on their cards to even begin to grow. But I wanted to see some transaction revenue stuff like this. Maybe that is also in the other revenue here for transaction-based revenue, which would show maybe a potential difference between 10 to 24 million. Adjusted operating expenses increased 14% year over year. We already talked about this. It's unbelievable. Like they said, 90% of their expenses are fixed expenses, which means that they can go down. Okay. Super interesting. They've paid for things that will get paid off eventually. And yeah, share count's doing fine. They have been buying a little bit of their shares back, actually, from the market. They started doing that in July. They still have a ton more shares to actually buy back this year, $1 billion in total. All right, take a sip of my water. All right. What else do we have here? They talked about adjusted operating expenses in SPC. Once again, going to stay relatively flat for the most part. And whenever we look here, wait, let me go down to, there's a different slide that I used to look at that better describes it. Here it is. So current financial outlook for the year going to December of 2024, total operating expenses, $1.85 to $1.95 billion versus $2.4 billion of last year, and same with the year prior. So operating expenses are actually decreasing, while seeing so many benefits to signing on new customers, paying for all these new operations that they're doing with credit cards and everything. You'd expect some level of operating expense increase, but we're just not seeing it. They don't expect it because they can cut costs in other areas. All right. Monthly actives. So let's cover this real quick. Vlad Tenev on the call said that he does not believe that this is a number that investors should be following because they're not necessarily they get no benefit from a user being on the platform just as a platform necessarily, right? If they don't have an ad platform or something like this, then they can't monetize a user just staying on the app. Okay. So they're saying, hey, follow the actual trading volume. That's how you're going to follow whether people are using our services or not. And that is how we monetize. So follow the trading volume. That's how you're going to know that we're doing better or worse, not monthly active users, which does not translate. We don't actively try to keep people on our platform. We don't try to actively return them to our platform. So it's not a big deal. These are the big deals. Okay. Volumes, margin book, option contracts, equity notional volumes, and crypto notional volumes, which was a little bit of a disappointment for June, but they'll have a lot to step up, especially with Bitstamp, especially going global and stuff like that. It'll be interesting. Margin book, however, not just the margin book. The margin's doing amazing because they actually ended up lowering their rates. But I want to see a fifth block in here for their own credit cards as well. As they start to do that, it'd be interesting to start seeing, transactional spend, the amount of credit card, interest balances that are still on the platform. That'll be fun. What are you guys saying? SoFi needs to acquire Worthy Financial. All right, ladies and gentlemen, that's it for me, though. I'm going to get a little food in the belly and get ready for tomorrow's earnings calls because we are thick in the earnings stream, especially for fintech. And so far, I actually was there a fintech that did bad this season so far? Robinhood hit it out of the park. SoFi hit it out of the park. Upstart did well. The stock did. That's the only one that's responding. The stock went up, 50+% at one point. I think it's down to 20, but down to 40. But yeah. Why couldn't SoFi no moon then? I mean, that's the market, man. People are going to make plays on what they think is going to happen into the future. I think the important part is not the stock price. I think you should forget about the stock price and worry about buying, fundamentally growing businesses. And that's what these companies are doing. And I think that over time, like even last quarter, Robinhood's Q1 quarter was unbelievable. Unbelievable. And the stock ended up falling on that news. Then throughout the months of the rest of the quarter, the stock went from $16 or $16.20, whatever they ended up dropping to, all the way into 24 plus. Tanner, you called the run on Upstart. Well done, sir. I mean, that stock, the thing that I said was going to run, I'm not going to take all the credit for a 50% run. That was ridiculous. What I did believe, though, is that stock does not trade on the actual earnings results. They trade based on guidance and they trade based on management's, commentary of what they think of the future. The second that they said that guidance is getting revised upward, that they think things are going to get a heck of a lot better, and this is not inclusive of any sort of macro change or rate cut, boom. That's huge. Peter Lynch, we have his son. I mean, honestly, that's what I tried to be. I mean, Peter Lynch is the GOAT. He's the greatest of all time for growth investing. Tanner finally started a position at new $10.75, 1,000 shares. Congratulations. That's cool, man. And it's cool that you're able to get prices like that. I mean, we'll have to see the earnings call. It's coming up. I think it's August 18th, something like this. I'll have to check the thing. Thoughts on Shift 4 in the AM? I mean, during the morning, I'm going to be covering them. I hope for great results. But no, I don't have anything extra to add that other people don't know or something like this. Yeah. I'll be covering them though. I think I'll go live for that. Shift 4 is a like growing quickly in my portfolio. So it's no SoFi position or even PayPal position, but it's growing. Um, I only need 250 shares to reach 1,000 shares of SoFi. Not far off, my friend. Sven said, thanks. No problem, good sir. Shop killed it in the morning. Now that's one I cared about. That was fun. You know, uh, Shopify makes up for a large position in my portfolio. Way more impactful than SoFi and really any other name that we talk about here. So that was interesting. I think like that's the same thing. Like last quarter, literally the quarter before, Shopify took a beating, and then everyone was like, "Hey, that sucked, didn't it?" And I'm like, "Yeah, it did, but the company's fine." It's just funny how everything can just switch. It's all sentiment. Um, in my opinion, you do not need to look too much further than, is Shopify expanding their total addressable market? Are they taking a larger percentage of the commerce market globally? The answer is yes. For every, what is it? For every 47 merchants, or sorry, for every merchant that they lose, they gain 46 merchants. Okay. You know what I mean? They're expanding up. Not only are they expanding in e-commerce, but they're expanding in commerce globally. They will be a multi-decade company. And as outrageous as it was for me to say that, you know, um, like Nvidia was going to be the most important company in the world, I'll say Shopify will be a top, well, they'll definitely be $1 trillion company eventually. That's for sure in my mind. Um, buy companies that compound over time. You don't need to find a company that's going to raise up 100% in one earnings call. You just need a company that makes a crap ton of profit, lowers it to their balance sheet, and continuously innovates and creates the best products for their customers and their users. That is the best company that falls in that list, in my mind. Ladies and gentlemen, thank you so much. I'm starving. I apologize for the low energy call. I just haven't eaten a thing. Um, and things get really busy around earnings season. So I'm working a lot these like in the last little bit. Thank you all so much for watching. Really do appreciate your time. If you like this sort of stuff, hit the subscribe button, like it, whatever. I don't care. Bye.